Welcome back, everyone. We're very glad to have you with us today. If you own a home, receive Medicare benefits, or know someone who does, this is one of the most important discussions you may hear this year. What we're about to talk about is affecting millions of Americans, especially seniors, and many people have no idea it is happening until they receive a shocking letter in the mail, a denied claim, a canceled insurance policy, or discover that benefits they depended on have quietly disappeared. For decades, many Americans believed that if they paid their insurance premiums on time, maintained their homes, and followed the rules, they would be protected when they needed help. Likewise, many seniors assumed that once they enrolled in a Medicare plan, the benefits they selected would remain largely the same year after year. Unfortunately, the reality in 2026 is becoming far more complicated. Across the country, homeowners are discovering that insurance companies are using advanced technologies that most customers never knew existed. Homes are being monitored from the sky. Artificial intelligence systems are reviewing properties. Algorithms are making recommendations about coverage. And in some cases, these systems are influencing decisions that can determine whether a homeowner keeps insurance coverage or loses it. Many people imagine that insurance inspections occur only when someone physically visits a property. That used to be largely true. Today, however, the landscape has changed dramatically. Insurance companies now have access to aerial imaging technologies capable of capturing detailed photographs of homes and neighborhoods from above. These images can come from satellites, aircraft, and other remote imaging systems. Sophisticated software then analyzes those images, searching for anything that might be considered a risk. The technology looks for aging roofs, tree branches hanging near structures, debris in yards, signs of wear, discoloration, surface damage, and dozens of other factors. In theory, this technology helps insurers evaluate risk more efficiently. In practice, many homeowners are learning that the system is far from perfect. Imagine opening your mailbox one afternoon and finding a notice informing you that your insurance coverage may not be renewed. You have never filed a claim. You have never missed a payment. You have maintained your property carefully for years. Yet suddenly, your insurer claims there is a problem with your home. That scenario is becoming increasingly common. Some homeowners report receiving notices based on aerial images showing alleged roof damage. Others are told that nearby vegetation creates an unacceptable risk. In some situations, homeowners are surprised to discover that decisions affecting their coverage were made using images they never saw and analyses they were never allowed to review. What makes the situation even more concerning is that technology is not infallible. Artificial intelligence systems make mistakes. Images can be outdated. Shadows can create misleading appearances. Properties can be confused with neighboring homes. Yet when a computer-generated assessment enters the decision-making process, reversing the outcome can become difficult. For seniors, these developments can be especially challenging. Many older Americans have lived in their homes for decades. They take pride in maintaining their properties. Their homes often represent their largest financial asset. Yet many of those homes also have characteristics that insurers increasingly view as risks. A roof that would have been considered perfectly acceptable a decade ago may now trigger concerns simply because of its age. A property that has experienced no issues whatsoever may suddenly face increased scrutiny because underwriting standards have changed. This creates a difficult situation. A homeowner may have a roof that remains functional and safe, but if the roof exceeds certain age thresholds, insurers may classify it differently, regardless of its actual condition. For retirees living on fixed incomes, replacing a roof can be a major financial burden. Roofing projects often cost thousands of dollars. For some households, the expense can reach well into 5 figures. Being told to replace a roof that appears to be functioning properly can create enormous stress and uncertainty. Yet the challenges do not stop there. Another issue receiving increasing attention involves how insurance claims are paid when damage occurs. Many homeowners assume that if a storm damages their roof, insurance will cover the full replacement cost, minus any deductible. Unfortunately, that assumption is not always correct. Some policies calculate payments differently. Rather than paying the full cost of replacement, they consider depreciation. In simple terms, the insurer evaluates the age and remaining useful life of the damaged item. The older the item, the lower the potential payout. This distinction can have major financial consequences. A homeowner may assume insurance will cover most of a repair, only to discover that the actual reimbursement falls far short of what is needed. Suddenly, thousands of dollars in unexpected expenses become the homeowner's responsibility. For retirees on fixed incomes, that difference can be devastating. A financial setback of several $1,000s is not merely inconvenient, it can disrupt budgets, drain savings, and create long-term financial strain. This is why understanding insurance coverage has become more important than ever before. Many homeowners pay premiums for years without thoroughly reviewing policy details. They assume coverage remains unchanged. They trust that protections are in place. However, insurance policies evolve, terms change, coverage limitations may be added, conditions may be modified. That is why experts increasingly recommend reviewing homeowner policies annually. Understanding exactly what is covered, what exclusions exist, and how claims are calculated can prevent unpleasant surprises later. At the same time, another challenge is quietly affecting millions of seniors across America. While homeowners are dealing with insurance changes, Medicare Advantage enrollees are discovering that some benefits they relied upon may not be as generous as they once were. This issue often receives less attention because the changes can be subtle. Benefits are not necessarily removed overnight in a dramatic announcement. Instead, adjustments may appear within annual plan documents that many beneficiaries never fully review. As a result, some seniors only discover changes when they attempt to use a service they assumed was still available. Perhaps they expect assistance with certain health-related purchases. Maybe they plan to use a fitness benefit that helped them stay active. They may rely on transportation assistance, vision benefits, meal programs, or other supplemental services. Then they discover that eligibility requirements have changed, allowances have been reduced, provider networks have shifted, or benefits have disappeared entirely. The experience can be frustrating and confusing. Many seniors choose Medicare Advantage plans specifically because of these additional benefits. These features often play an important role in managing health, maintaining independence, and controlling costs. When changes occur without a clear understanding of what has been modified, beneficiaries may find themselves unprepared. This is especially important because healthcare costs continue to rise. Prescription medications, medical services, specialist visits, and routine care can place significant pressure on retirement budgets. Even seemingly minor benefit reductions can have meaningful financial consequences over time. What makes these developments particularly significant is that they are occurring simultaneously. Homeowners face evolving insurance practices. Medicare beneficiaries face changing plan structures. Inflation continues affecting household budgets. Healthcare expenses remain elevated. Property maintenance costs continue increasing. Taken together, these pressures create a more complex financial environment for retirees than many experienced in previous decades. That does not mean panic is necessary. In fact, the most effective response is knowledge. The homeowners who understand their policies are generally better positioned to respond when issues arise. The Medicare beneficiaries who review their coverage annually are often more successful at identifying changes before they become costly surprises. Preparation remains one of the strongest tools available. Take time to review your homeowner insurance policy. Understand what type of coverage you have. Learn how claims are calculated. Verify any age-related provisions affecting major components of your home. Review your Medicare coverage carefully. Confirm what benefits remain available. Understand provider networks. Check supplemental benefits. Ask questions when something is unclear. These simple actions may seem routine, but they can potentially save thousands of dollars and prevent significant stress later. The reality is that many of the biggest financial surprises facing retirees today are not caused by sudden disasters. They are caused by gradual changes that go unnoticed until the moment they matter most. A policy changes, a benefit is reduced, a coverage rule is modified, a claim is calculated differently than expected. By the time these issues become visible, the financial impact may already be significant. That is why staying informed has never been more important. The financial world is evolving. Insurance companies are adopting new technologies. Healthcare plans are adjusting benefits. Regulations continue changing. Economic pressures continue influencing decision-making across multiple industries. For seniors, awareness is no longer optional. It has become an essential part of protecting financial security and maintaining peace of mind. The good news is that knowledge gives people power. Understanding how these systems work allows homeowners and Medicare beneficiaries to make informed decisions, ask better questions, challenge errors when necessary, and prepare for potential changes before they become emergencies. As we move through 2026 and beyond, one thing is becoming increasingly clear. The individuals who stay informed, review their coverage regularly, and actively manage their financial protections will be in the strongest position to navigate whatever changes come next. Thank you for spending this time with us today. If you found this discussion helpful, be sure to subscribe to the channel, turn on notifications, and share this video with friends and family members who own homes, receive Medicare benefits, or are preparing for retirement. Staying informed today could help prevent costly surprises tomorrow. We appreciate you being here, and we look forward to seeing you in our next video.